Good morning and welcome to the Fractal Effects live stream. Please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors and this is not financial advice. We'll jump onto the charts in a minute. So we always start off with the indices until we get another alert. And now with NAS, we had a downside expansion model. Until New York swept all the highs, disrespected that. So right now, we turn to our higher time frame. So we're red on the 1 minute and the 5 minute, even though our overall daily bias is still bullish. Today's Thursday. Thursday usually retraces back to our weekly range, marked out there in the aqua line. So we're inside of it right now, with the highs being up here. And London lows have not been swept. So if we get a bearish confirmation, most likely do at least one standard deviation to the downside. If our confluence matches up, and if we get a bullish confirmation, most likely heading up to the weekly range high and of even previous day's highs. Just a little higher up here. A lot of consolidation here. We did have some news drop today. News dropped at 10 o'clock, 9:45. I believe even at 8:30 today. So we're under the 238. We've had a crossover already. So again, we are bearish on the smaller time frames. And we're getting a lot of rejection off of the New York gap. We have London's gap here. They're just engineering new liquidity. People who are going long from here, people who are going short from here. That's why we want to wait for confirmation. We have alerts set across multiple assets. So as soon as one of our alerts goes off, we'll jump in over there. we're back at that same fair value gap. So far, these two markets are exactly the same. London's fair value gap is inside New York's fair value gap for US 500. And the market is rejecting off of both of them at the same time. So we're getting a bit of power of 3 here. This could have been the false move. Maybe I'll shoot it up after this. Okay, we have a confirmation on oil, so we're going to switch. Sorry, that's the wrong one. Oil, again, back in the weekly range, heading towards the bottom of the range. We are red on the higher time frame and red on the lower time frames. A bit of an opposite model here, where we were going into an upside expansion. We had a bullish confirmation, retracement, extension, almost made it to 1 standard deviation in London. Now we've swept Asia lows. So right now the fair value gap of interest is right here. I would like to see it retrace in a little deeper, touch that 20. This fair value gap is not yet set, but I'm just going to drop in a little. We'll anchor it later. Let's drop in a fib. Just to see how deep it could retrace. So there's an area of interest for me. Here as well. That's just to let me know how deep the market could retrace. 1 minute, 19 seconds left. Let's see if this fair value gap stays open. Nah, still stuck at that fair value gap. For anybody who's not following us on Instagram, please check us out at fractal.effects. We're always dropping more educational material there. In case there's ever a failure in the stream or we're having any technical difficulties and you don't see us on YouTube, please check us out on Instagram for a follow-up. That's where we'll be dropping any message, or in case like we're not live, you'll know why. "15 seconds left. Not much of this fair value gap left, but let's see if it stays open. $20 is now at that area that we marked off. So this fair value gap is right at the bottom of the dealing range itself with this gray line. So it could just tap here and go, but we have not had an early retracement, so I would like to see it retrace a little bit deeper. So the first wick here is not going to interest me too much, just because, as mentioned before, I know it's going to at least come down to hit this. So the deeper it retraces here, the more it gives me room for that 1 to 3. Could it go deeper and further? Of course. We can go all the way down to 1 standard deviation, which is down here. But even that might not give us, that could actually, we'll see. So for whatever reason, if we got in here, that'd be my stop loss. 1 standard deviation, 3.82, but it'd be pretty tight. Have to get in here. Whereas in, if I got in up here, at least closer to the 20. That's a 4.16. That's the number I'm looking at, 4.16. That's your risk to reward ratio. And you can make a favorite toolbar on TradingView. This is the short position and the long position. You can just, from here, they're under here, I believe. Yeah. You can just star them, and it makes you a favorites bar at the top. So we're going to watch how it maneuvers this fair value gap, but ideally I'd like to see it retrace up to this one. So it's already tapped our weekly low, weekly range low. Didn't really give us any entry, so that's fine. Let's see what it does though, as far as retracement and then extension to that 1 standard deviation. So far there's only one thing that doesn't fit our confluence. So we have our lower time frames matching up with our higher time frames, so we're on trend. We have a red box, bearish confirmation. We are lower than London, but it's not a full downside expansion model. It's the only thing that doesn't match up, but we have swept lows, all the lows. So we are on trend. Once again, please make sure that you understand the lot size of whatever asset it is that you're trading. Make sure you have a lot size calculator. You can just, there's multiple free ones on Google. And again, if you're following along today, make sure you're doing a demo account. So far, no retracement, so this is not really interesting me. We've had no other alerts go off. NAS is still just stuck right in that fair value gap. If this thing continues to push without ever tapping in, we didn't miss out. But we should see some movement here. Just patiently waiting. So yesterday's oil trade, it did eventually come back and tap our stop loss, which we had moved to break even. And then I believe it pushed back down, but it stayed in that range majority of the day. We'll go take a look at that. So we definitely moved our stop loss at the right time, took some off the table. So we're almost at one standard deviation. No other alerts have gone off yet. So we're not missing out on anything yet. NAS, again, still just stuck there. I do not like to see this much consolidation after news drop. There was 2 red folders today, and yet we're still in a range. That means on the daily time frame, this is most likely just going to be a doji candle. Almost at one standard deviation. It did not give us any tap in it. No retracement happened. Remember, a true retracement is once we have confirmation and then we've created a fair value gap, it has to come in and at least touch the fair value gap, the dealing range, or 20 EMA, the fib levels. It has to come into the range at least. So it's almost at one standard deviation. I'd like to see a retracement. Our 20 is now pushed past this other area of interest, which was sitting at 50%. And it's slowly coming towards this fair value gap. Now if we pull back before we hit one standard deviation, this might be interesting. About 10 minutes away from 11. No other alerts have gone off yet across our other assets. Again, if you're following along with us, make sure you add some of these tickers to your watch list on TradingView. We look at US oil, or whatever the equivalent is for through your broker. Could be Brent crude, NAS 100, CFD contract, US 500, US 30, Dow Jones Industrial. We do have Bitcoin set up there as well, even though I don't recommend everybody trade it, but again, this is for educational purposes. So if we do get confirmations, we will jump on over there. We have a couple of Forex pairs, foreign pairs that don't have the US dollar in them. The Aussie dollar against the New Zealand, GBP, Euro GBP, and then GBP JPY against the Japanese dollar. So whichever one gives us a confirmation first, we'll jump in over there. Oil, still just pushing, but we haven't hit one standard deviation yet. We could still pull back before shooting out. Our 30-minute just turned red as well. This is all bearish now. Bearish on the higher time frames, bearish on the lower time frames. All of our confluence is matching up. We just don't want the juice to be squeezed though. We want to see at least a decent retracement before we get to this low-hanging fruit of one standard deviation. NAS, obviously the higher time frame bias is bullish, but the 1 to 5 is red. Again, a bit of a mixed model here. But we have a green box. So we're actually inside London range right now. We were forming an upside expansion model. So we're past one standard deviation. This thing is just flying to the downside. Juice has been squeezed. Could it still retrace? Then give us another push? It could. We'll keep an eye on it at least. But during these training sessions, usually our target is only one standard deviations. Still waiting for another confirmation. As soon as we get one, we'll jump onto that chart. Again, if you're looking to see how to set up alerts on our indicator, just watch the indicators video in the Learning Hub on Fractal Effects. You can set multiple, even with a basic plan, I think you can set at least 5 alerts at the same time, if I'm not mistaken. So you can be watching 5 different assets at the same time. As soon as you get that alert, you just jump. Still no confirmation in NAS. Since this is all still the same leg, the fib level. $20 slowly getting close to the fair value gap that we left back here. Pretty much the only fair value gap that was left. That's anywhere near or inside the range. The next one is the actual opening gap. No other alerts have gone off, so we're not missing much. Four minutes from 11. Yeah, unfortunately, this didn't give us a retracement. If it had given us a quick retracement, this would have been a nice quick trade. Now it's pushing down still. Hasn't broken this range. Oil looks like it might be retracing. Now is now under the London fair value gap. Looks like it might be pushing. So remember, there's a high probability that after we get confirmation that the market will retrace back into our dealing range, this gray line. So the fact that it has not yet, we're not interested in any of the fair value gaps that are created outside that range, especially not when it's moved this quick all the way to 1 standard deviation. Looks like we're getting a bit of a retracement now. The 20 EMA is sitting inside that fair value gap now, which is right at 50%. But again, since we've already gone past 1 standard deviation, I'll be very leery. We'll see what happens here. Other than that, there's really no other alerts that have gone off yet. We're stuck in a range in the indices. No other confirmations. NAS bouncing again off the London fair value gap. So London was clean. We had a bullish confirmation retracement back to our EMAs. And it took a while to actually break the highs here. So more or less the set it or forget it. Sorry, set it and forget it. So once you hit 2R, you just walk away from this. Let's take a look at Asia until then. Asia gave us again a bullish confirmation. No retracement back into the range. We did have an outside the range retracement to the 20 EMA, which is what this might give us as well. But again, in cases like that, we're not interested. This was already at 1.5 standard deviations. That's where it retraced back to. It's like trying to catch a runaway train, even though it only consolidated. That didn't have to be the case. It could have just completely dipped, gone. Now still at the London fair value gap. Oil has not done any retracement yet. And as mentioned before, if we get like a quick retracement to the bottom of the weekly range and the 20 EMA meets us here, I'm not interested. It's not deep enough, and we don't know how deep it could go. Oil has also taken out previous day's lows, so it's already swept that liquidity. 25 minutes left. Let's see if we can't find a high probability trade setup. Guess while we're watching this, we can take a look at yesterday's trade. So we just gesticulated down here. We caught it up here, came down, we rolled our stops, took out our stops, and then it just broke below where 2R was supposed to be. I believe 2R, we made the weekly range. And then it never really got to 3R. Just bounced around till the end of the session. So we made the best move there to get out at the right time. Capital preservation, that's always our number one goal. No real retracement yet. We haven't even retraced back to the weekly range here. Remember, these are powerful zones. We retrace back to them, and then they even become support and resistance once we've passed over them or under them. So from the way the 20 is moving, you might just want to catch this fair value gap here. Leave the 20 in there, bounce off that weekly range. But again, I'm not interested outside the range. Lower probability, not to mention our risk to reward decreases. No other alerts have gone off yet. NAS, again, still stuck there at the London fair value gap. Almost at 1.5 standard deviations. Let's see if it just keeps pushing down. NAS unable to break the range yet. 20 minutes left. Let's see if we get a movement. Still nothing. No other alerts have gone off. This is the only one of interest, but it didn't give us any entry. Even if it plays off this fair value gap and just continues to push down, that's nowhere near where we'd even be looking. Even if we are going to think about taking a trade outside the range, this would be the area. 20 EMA, fair value gap, bottom of the range. Bottom of the weekly range. But again, not interested right now. NAS once again above the London fair value gap. So just waiting and watching. Once again, London already gave us that bearish confirmation, but dropped before doing any real retracement. Now that we've already taken out the low-hanging fruit, we've actually pushed to about 1.3 standard deviations. I'm not really that interested. We're just watching this. NAS, along with the other indices, unable to break this range. We're stuck between New York's fair value gap and London's fair value gap, just engineering new liquidity on both sides. Oil is at least on trend. Our lower time frames match up our higher time frames. Still no movement. Nas back at the New York fair value gap. Oil just gesticulating here now at the bottom. .12 minutes left. No other alerts have gone off yet. Again, oil never really gave us a real entry, even an outside the range entry. Nas still stuck in the range, no confirmation, no other confirmation across any other asset that we have an alert set on. About 10 minutes left in our stream. And again, this is what prevents FOMO. Even though the market was moving, at the speed that it was moving, and the fact that it never even retraced back into the dealing range, and our aggregate shows that over the last 20 years, there was a over 70% chance that it was going to retrace. Can't fight those numbers. There's no, why would there be FOMO? Why would you feel bad about that? There's no way to get in because it never even came back and gave us an entry. Over a 70% chance that it was going to come and at least tap this. And then the probabilities decrease the further we get away from the range. But oil is, again, on trend, bearish. We've already gone past one standard deviation. I thought at least one of the Forex would have confirmed by now, but no, we have 0 alerts. Now this looks like it's at least close to confirming bullish. It's finally above New York's fair value gap. It's above the 238. We've had no crossover yet on the 5 though. We are bullish. But with this much consolidation and this late to even confirm, this is not a market I'd be interested in. And this is how you got to recognize when to walk away. Remember, day trading is not everyday trading, even though we have a upside expansion model. We are bullish on the higher time frames. Look at all this consolidation. Even if we get a bullish confirmation, we've already had multiple retracements back and forth. So if this gives us a bullish confirmation, it could just tap anything and push, or it could just dip back down, take out the lows again. Remember, it's time, then price. Always look at the time. We want to be in a high probability trade setup 1 hour after the range formation. And then our goal is to be out by noon, New York Eastern Standard Time. If you're doing this right, you only really need 1 trade setup a week with a proper 1-to-3 risk to reward ratio. That'll give you 12% a month. Once again, bouncing off of that New York fair value gap. Learn to recognize low probability days. When you see this much consolidation, that's all you're going to get. That push that comes could happen at 12, 1, 2. There's no way we want to sit in the market watching it for the next 2-3 hours, hoping for that small push. That's why we just call it a day. Come back, take a look at it on another day where we get a more favorable trade setup. 6 minutes left. Oil slowly starting to begin that retracement. But again, this late in the game, I'm not interested. No alerts have gone off. Most likely just consolidating across all these other assets. Just going to take a look at GBP USD here for a second. See if there's a point in adding one of these. So we did get confirmation. Let's see what kind of a range model we had. So upside range model, upside expansion. But yet we got a bearish confirmation, bouncing off the 238. So here we are red across the board, and we're red on the smaller time frames. So the upside expansion model is the only one that doesn't actually fit the confluence. As far as the weekly range, we crossed into it, tapped the top. Now we could just bounce off of these EMAs and head down. But again, another example where we hit 1.5 standard deviations before the retracement came. So because of the late retracement, and the upside expansion model, I'd avoid this one. We're bouncing off the 238. It could just easily push through. 15 is not red either. But we'll add one of the US pairs as well. Add an alert to it for next time. Please make sure you check us out on fractaleffects.com. Please make sure you're subscribed, have your notifications on so you know when we're live. Currently we are live Tuesday, Wednesdays, and Thursdays. Make sure you follow us on Instagram, fractal.effects, in case there's ever any news or we're having any technical difficulties or you don't see us online. Check us out on Instagram to figure out why. Getting a reaction off of that. Again, if this was a downside expansion model without the 238 under us, and the 15 was red, I'd be interested. But again, the juice has been squeezed, 1.5 standard deviations, no real retracement. Let's just go back to oil real quick, see if there's been any change. Then we'll conclude it there. Oil, trying to shoot up now. Too late in the game. Even from here to 1 standard deviations, there's not enough. I don't even believe that'll give us the 1 to 3. Let's take a look. Again, just putting it in vaguely here. We haven't seen any actual touch. Just aiming for the lows for now. Yeah, 1.73. All right, that concludes our session. We will see you guys next week. Have a great weekend.